And that means we are live here on our YouTube channel, Tackle Trading's Halftime Report, a daily show whenever the markets are open, where we break down the charts, the news, the information, the companies, the commodities, anything on our mind that we find interesting and that we want to bring some insight to you out there, our listener. Welcome out, everybody. If you're watching our show for the first time and you're here on our channel, welcome. You'll love it. Give me a subscribe and click on the bell. Come back and join us each and every day. If you're one of my veterans and or even if you're new, hashtag Team Tackle is our Team Tackle official hashtag there. Pop that in the chat. Let us know how you're doing. On today's show, vaccine hopes. There's some companies out there, Novavax, Merck, this general optimism about the vaccine. We're going to be breaking that down. Take a look at some of those charts. The market is trying to break out of resistance. You got an intraday break here, sitting on that 200 period moving average. You got some breakouts that actually gapped out and failed those. So we're going to take a look at those stuff on oil, other companies that are grabbing our attention like AT&T and whatnot. But let's roll right into it. Maddie, how you doing today?
Tim, I'm doing absolutely fantastic coming out of a 3-day weekend. Excited to be back in the halftime report and with the crew here today. But I can summarize the entire market. You can read every news headline you want out there. You can read it over the last 3 days, and it's all going to say the same thing. Markets up on hopes of vaccine and the economy opening back up. That's the complete narrative right now. Vaccine, economy open back up, buy. The only question I really have, and I'm sure we're going to break it down here today, and we got a lot to talk about, but is there a rotation happening? And I think we're too early to tell. Obviously, one day doesn't make a rotation, but we are starting to see some of those distressed areas of the market, like financials, industrials, energy, and so on and so forth. You're starting to see some strength coming out of those sectors, and the gap up and then fade on some of those market darlings and the momentum stocks and the vaccine, the stay-at-home place. A lot of those broke out, came right back down. So the question I have today, and probably the question I'm going to be focusing on the rest of the week, is: are we seeing a rotation from the top of the market that's really kind of led this rally to bottom feeding? And it's a little bit of what we talked about in the podcast yesterday.
What's interesting about that, obviously, I mean, you're looking at the percentages here today. We'll go through all the sectors, but geez, financials up 5%, Matt. That is obviously a very, very impressive move just out of the banks. You rarely see financials moving 5% on any day, and obviously a lot of strength there. We'll get to that when we get to sectors.
Good data out of the housing industry today, though, and very, in my opinion, very positive data coming out of the housing industry today.
Let's break down this market technically first, though, because I find it very, very fascinating here. The intraday is a clear breakout. There's not even a debate, but we are riding on that 200 period moving average. And you've also got that key level. I mean, every trader, who's ever been around markets, even going back hundreds of years, you get a big fat round number, Matt. Psychologically, we all pay attention to that. What did you read on the chart here?
Well, my reading on the chart, and the question is this a confirmed breakout? Obviously we still got another, 2.5 hours or 3.5 hours left in the trading day. So we got a lot of, time coming into that breakout, but a close above 3,000, even if it's, slightly above it, you got to call it a breakout. And one of the reasons you got to call the breakout is, number one, you are above that 3,000 level, which is a psychological barrier, but you're also right above that 200-day moving average, which is also right there at 29.99. You're also showing some momentum and really some resiliency from a support level with this rising 90 EMA, keeping pressure on the market, driving up there as well. But what gives you a little bit of confidence here, and again, obviously anything can fake out here, but what can give you a little bit of confidence is, last Friday, we saw that retest of that 29.70, right there, that 29.70 level. And then coming here on Monday, you really kind of broke out of that level and showed some initial momentum to the top side. Now, what we're seeing since the really kind of the overnight European action here is just a little bit of consolidation as we're approaching that 3,000 level. And now you're testing that 3,000 level over the last 2 hours, really since the stock market opened up. Every time it's tested that level so far, it has rebounded back up. So you are showing a little bit of weakness since the cash open, but the market is holding that support level right now, 3,000. What's interesting is when you look at some of the other areas of the market from an index perspective, and President Trump tweeted about this today, and he used those fat hold numbers that we all love in the market. S&P above 3,000, Dow above 25,000. And on the Dow here, you've seen a much stronger breakout on the Dow with the initial strength with volume supporting that potential breakout right there at about 2470, up above 25,000. That certainly could play catch up fairly quickly, coming back into that 26,000 level on the Dow. When you're looking at the NASDAQ here, this is what I'm seeing here today across the board is, not only the NASDAQ, but sectors like communications and healthcare and as well as technology. Those sectors have really been leading this charge over the last 2 months as the market has, well, maybe, the economy, as the market has shown some recovery here. But a lot of these companies gapped out, came right back down. But when you're looking at some of these, distressed areas of the market like industrials, you're starting to see confirmation of bullish reversal signals. And since the cash open, you're seeing a little bit of strength here as well. So when you're looking at the industrial index here, gap out, and then it runs away from the gap, and that shows you a little bit of strength. But once again, coming into the S&P 500 and a lot of the areas that have really kind of, shown strength in the market, like technology. Let's take a look at tech real quick. It gaps out on the futures data, breaking that down into a 30-minute chart. You see that gap out on the futures, and then price comes right back down. And that's what leads me to the conclusion, maybe not the conclusion, but the thought process that we may start seeing some rotation here from, that the strength of the market that's really kind of been leading this recovery to some of those areas of the market that have been distressed. I mean, airlines, Southwest up big today, Delta up big today, United up big today, American up big today, all up 8, 9, 10% today. Industrials up 5% today. You're seeing some rotation happening today. And once again, is this something that is just a one-day situation where there wasn't a lot of news and we're, the hopes of the economy opening up and a vaccine and some of these distressed areas of the market playing a little bit of catch up? I just think that's something in the back of our heads right now. And then when you look at the Russell 2000, another looking very similar to the Dow, up 3.3% on the day. Nice little breakout. I think it's easier to say the Dow and the Russell 2000 are breaking out today than the S&P, which is just kind of fading at that 3,000 level.
Yeah. And those sectors are really, really fascinating. I know you hit on most of them there. Obviously, that financial sector just showing the strength is interesting. You kind of started
down all technically here in a little bit.
In a little bit, yeah. And the banks, though, I mean, on that data, like you're talking about, the housing data was really impressive here today. Mark,
let's talk about it. You brought it up. Let's talk about the housing data real quick. And it was very positive. I mean, we didn't just have housing data. You had 2 economic reports here today, and let me bring in Forex Factory so you can kind of see the reports here. Now, when you're using Forex Factory to kind of look at all economic reports, I like to geek out on economic reports, so I look at all the major currency economic reports. But if you just hit that filter button, click none, just US, just look at all the major US economic reports, hit apply filter here. Now you can just see kind of the U.S. economic reports that came out today. And the 2 that is piquing interest in the market are consumer confidence, number 1. Now, the consumer confidence number did come in underneath the expectation. The expectation at 87 came in at 86.6. But a lot of the market took that today as consumers, and we've talked about how important the consumer is to this marketplace and how important it is to the overall national economic recovery as well. The number was bad. 86.6 is not a good number, but coming out of what we came out of in March, to see April's numbers start to recover and kind of flatline in comparison to March, I think the market did take that as a positive, number 1. What was really interesting, though, is coming out of some of the negative economic data we saw in April and March from a housing perspective. New home sales rose quite dramatically in the month of April, exceeding 623,000 new homes sold versus the expectation of 492. So month to month, we really didn't see any change. But again, a negative number is not a negative number if the market expects a 22% drop in new home sales and it actually stabilizes. So even though new home sales and consumer confidence were not good numbers today, given the fact that where they were last month, to see a little bit of stabilization in the housing market, to see some stabilization stabilization in consumer confidence. Both of those things are two very positive things for the economy moving forward. If we can see that trend continue, in the months of June, July, August, coming into the fall.
I also saw home prices up 4.4% as well year over year. And so you're getting asset appreciation in equity prices and home prices across the board. And those home sales numbers, to throw a little bit of salt on that wound, they are way lower than they were last April, but man, beat the expectation, no doubt about it. You gotta like it.
Like I said, not good numbers economically if you're just focusing on the actual number. If you're comparing, April of 2019 versus April of 2020, obviously we're looking at completely different, behavioral situations, economic situations, geopolitical situations. And so when you just focus on the actual number, you can be like, oh man, last April was really, really good. And this is the worst numbers we've seen in the last 7 years since 2015. You can always point to the negative of some number in historical context, but putting into the context of what is happening right now, I think you have to take it as a positive from an economic perspective, given the fact that they were not as bad as what was expected. And we are starting to see some short-term stabilization in both the consumer confidence numbers as well as new home sales numbers. Now, existing home sales, not necessarily a positive number, as a lot of new home sales in April, obviously, people, and I mean home sellers were not comfortable in people coming to their home. They were doing more virtual tours. New home sales, from the report I read, consumers that were looking to purchase a home were a little bit more confident going into a home that's never been touched than somebody that's been living there for an extensive amount of time. So new home sales was really what the positive number was about.
Yeah, no doubt about it. Let's bring in Marky here for a minute. Mark, obviously, we're breaking into some new levels here today on the S&P. Dow chart and Russell chart are obviously stronger, and the NASDAQ actually kind of selling off on the intraday a little bit. But Mark, on this S&P, let's stay right here, 3005. Is this a breakout for you? I mean, how are you approaching and reading this market?
Well, I mean, technically, of course it's a breakout. I mean, there was much banter for weeks and weeks about that previous level on the futures. Started to edge up from it last week, and it's a clear breakout. Now, is there confirmation? Is it sustainable? That's the debate. But as far as an actual breakout, of course, technically there's no question about it. And how I'm approaching it is no different than anything. Do I think there's a good deal somewhere? Do I think there's a good trade setup? The one thing that will not happen to me at the end of all this is I won't be a bag holder of stocks in the current environment. I'll be tactical. I'll look for really quality trade setups. But as far as the technicals, it's 100% a breakout.
Mm-hmm. Yeah. And you brought up an interesting point in our pre-production when we were talking about some of the companies that are showing strength here today, Mark. You track the internals. I think Matt has a, real good point on the one-day rotation here, and can it continue? That's the big question, obviously. But what are you seeing that's strong right now? And what are you seeing this week just on your own personal internal list?
Well, I mean, you got all your distressed. I mean, percentage-wise, this reminds me of last Monday when I look at there's a handful of stocks I track: Delta, Southwest, Boeing, Cinemark, MGM, Carnival, Marriott, Six Flags, Kohl's, and Planet Fitness. And with that group of stocks, that gives me a wide cross-section of the distressed industry, some of the biggest companies, and a diverse, from movie theaters to restaurants to gyms, gives me a nice cross-section. They're off the charts today. I mean, we got out of that group, Delta, American Airlines up over 10%, Cinemark up over 10%, Carnival up over 10%, Six Flags up over 10%, with the other companies in that group having very healthy gains themselves. And so that cross-section group that I follow gives me an idea. And last Monday, we saw that group up big, huge, massive. Seeing it again today. Whenever you have any whiff of a vaccine, that group skyrockets. It's almost like there's this automated trade, something that goes on amongst algos and professional traders, that in the pre-market hours, those companies get jacked up whenever there's a hint of a vaccine, rumor, news, innuendo, whatever it may be. We've seen it each and every time. Every time there's been a vaccine, that group of stocks gets jacked up. Now, is it sustainable? Do you see continued healthy gains in that group? If you see healthy gains in that group in finance, this market has a lot of room up it can go still. But once again, until I see continued bullishness over the course of the week, you know, vaccine day is vaccine day. These companies get up huge on these days.
Yeah, but on that gap up on Delta, say last week, I mean, the market continued to buy throughout the rest of the week, and then obviously it gaps up coming out of the 3-day weekend. And that's why I'm like, is this a one-day thing when we're starting to see strength coming into these areas of the market, not just for one day, but really over the last week?
Mm-hmm. Mm-hmm. I mean, that's obviously everybody's big question here is, can you sustain this run here on the intraday and throughout the rest of the week? We've had a pretty good run here, Matt. Delta up and all of these distressed industries up based on that optimism around the vaccine. Bring up Merck if you can. I want to talk about this for just a second. Merck has now become the darling, you know, at least in the news about this, Mark. The stock is not actually benefiting from it. Novavax came out over the weekend, talked about a phase 1 trial. What do we know about vaccine, you know, progress right now, and why is the market so optimistic?
Well, I mean, it's another thing. Once again, let me get the exact headlines out for you. So they're going to collaborate with a company named AVI to develop a SARS-CoV-2 vaccine. And the Merck CEO, maybe why Merck is not heading to the moon. I mean, 2%. I love how you say that. Merck's not benefiting, like up 2% these days in the market. Yeah, that's nothing. You know, it's only up 2%. What can I do with that? But the CEO came out and said, hey, you know, this is a very long process, encouraged with the initial results. The development of a vaccine is a very, very, very long process to do it right, which is probably why Merck's not going to the moon, like you saw with Moderna. Amazing how Moderna, look at the price action of Moderna today. It's, you know, hey, it was hot for a day. It was hot for a day, you know, so. And I'm sure a lot of individuals are getting accustomed to the term bag holder that bought Moderna at the top there.
And these news base popped. I mean, you know, it's interesting when they come out, how they come out, and how it impacts the market, because then the negative news around any kind of progress on the vaccine front or the medical front, the market doesn't really care about it. In fact, you know, hydroxychloroquine was pulled from a trial by the WHO. They suspended that. Some of these CEOs come out after the fact, Matt, pour cold water on it, but the market doesn't care about the negative news. They buy up the hype, they buy up the run. And I think it's just that general hope and optimism that hey, we want to get back to business. We want to get back to life. It's interesting to watch how that is all developing. And economies are reopening, by the way, guys. I mean, Japan lifted their restrictions. California lifted some of their restrictions. You know, sports teams are now starting to practice again in some areas of the country. So obviously people are wanting to get back to life and get back to business. It's interesting.
It's amazing how positive a CEO of a pharmaceutical company is about their phase 1 vaccine when they're looking to add additional shares to the market. But Merck comes out there with multiple different drugs that they're working on. And the CEO says, hey, listen, this is a long process. Which one's telling the truth?
Mm-hmm. Yeah, probably. Yeah, that's a good point. There's no doubt about it. Let's work through all the commodities if we can. Oil first, if you will here, Matt. You had some news on oil with Russia I found interesting. Kind of update the team on that if you can.
Oh, it just Russia's meeting with the national oil groups to extend the cuts that they put in last month, and that's most likely going to happen. So we're going to start. We're going to see a continuation of the supply side cuts that has really been dominating the oil market over the last month.
Mm-hmm. You know, obviously the trend is now up on the short term here. You've gotten dojis now for about 4 or 5 days in a row. Price is starting to you know, kind of falter in here a little bit. Mark, what's your read in the oil market?
Well, I mean, if you think oil is going to go straight up, you know, in a V shape, that's probably not likely. Nobody in the oil sewing circle thinks that, but almost everybody these days is pointing to oil stabilization in price. Like I can't find a single analyst anywhere who isn't on board with that. And it's easy to understand why. The US has dramatically cut their production across the board, just across the board.
Mm-hmm.
You know, oil companies enjoying a nice, healthy little bump. Marathon's up. Marathon Petroleum Company is up 4% today. I mean, I'm seeing strength across the board in the oil companies. But let's not forget that Shell can't make money at $30. It can't make money at $32 in oil. And so for a lot of those producers to really benefit, they don't really benefit from stabilization. They benefit when oil's at 45 at least, right? So, you know, it's so you're not going to see those pipes turned on. I mean, it's a beautiful backdrop for oil. It really is. Because they're not going to open up the pipelines until you see higher prices, right? And it could take a while to get to those higher prices. So, you know, it's a really, really positive backdrop for oil right now. As far if you find ways to play it from a stabilization standpoint, not necessarily a, you know, oil appreciation and price standpoint.
Yeah. Matt, from a chart perspective, what are you seeing there just on the daily, the intraday and whatnot?
You know, we're seeing just that high base starting to form. You have a really strong support level right there. And oil still has a very, very big range to it right now, but you're seeing a little bit of support form right there at about 3140 by 3150. Overhead resistance very clear right there at about 3450. Now you do have that tick on the market open earlier this morning, about 3481 on the news that came out of Russia. But really, you're just seeing a little bit of consolidation over the last 4, 5, 6 trading days between that 31.5 level and that 34.5 level. A breakout of 34.5, in my opinion, certainly could be traded. I still would like to see a couple days of consolidation to set up, have that RSI come down, but sometimes you don't get what you wait for. So it's really forming a potential breakout of 34.5 by 35, in my opinion. And that breakout could be traded, absolutely.
You know, gold next, if we can, coming back down near support. Whenever you have a risk on environment where money is just flooding into stocks and equities on a day like that, obviously gold can come down on a day. Down 1.6%, but above support, above moving averages. Matt, what are you reading on that chart right there?
Could care less.
Yeah, not much there. Holding support, it is what it is. The dollar, same thing. Now
I mean, you're neutral. You're within the range. We saw this last Monday with a risk on asset classes. Gold came down a little bit. Nothing has broken its trend. It's still neutral between really 1760 and 1680 until either one of those levels are broken. There's really nothing to see here. If 1680 is broken, maybe you talk about potentially adding a little bit of insurance to the position, but until that happens, it's just par for the course with gold. Let it consolidate, let it do what it wants. Don't micromanage gold.
Yeah, kind of been rattling there for a couple months that way. Same thing with the dollar, by the way. Dollar is down near support as well. A very, very interesting chart. If you're a Forex trader, it's got to press down here on this support level, and it is affecting pairs here today. Matt, obviously a risk on environment, money coming out of the dollar. It's hard to even see that little doji down there on that 200 period moving average. I don't get any interest in the currency market until this range breaks. Quite frankly, it's been so stuck in the mud for so long, Matt. There's not much there. What are you reading there in the chart?
Same thing. I mean, you are seeing a fairly substantial down day in the dollar. I mean, a 0.72% movement in the stock market right now is an intraday blip. But when it comes to a currency, that's actually a fairly sizable movement. You have not broken the trend on the dollar yet. However, you're still kissing off that 200-day moving average. Overhead resistance is still holding. And so you still got to be some degree of neutrality from a currency perspective. But if the dollar does in fact break support, there's going to be trades to have in the currency market. Which currency, what spot pair, which cross pair, I mean, that's up to the trader's desire. But if the dollar does break, you're going to see price appreciation in other international currencies.
I want to make a quick point before we move on. Pull up the British pound US dollar cross pair, because we talked a lot about this one last week, and I talked about it in the Forex report. And one of the things that I stressed in the Forex report was that it was moving down. It did trigger in, but it was slowing. And I said, this is one that you need to make sure you correctly position size, because even though it was a great risk reward trade, anything can change that. News comes out last night, completely blows up the trade. So correctly position sizing and you'd be fine right here. If you over position size because you like the technique so much, you could be hurting a lot this morning. So to the Forex traders, I hope everyone listened to me on the report this weekend and did a small position size, and you're fine.
You know,
yeah, you did have news come out in the UK here today as their economy is reopening up and so on and so forth. So that kind of was positive news coming out of the pound. But with the dollar potentially breaking support, you're going to start seeing this in currencies. And Cody makes a great point. Cody makes a great point, but it's not just a point, the Canadian currency. Position sizing in an environment that is news driven. And this market is extremely news driven right now. They can be blown up. They can be positive. They can be negative. It can help. It can hurt. But proper position sizing is so vitally important in an environment where on any one day on the overnight action, anybody can say anything. And it's not just Trump or President Xi Jinping. It's any CEO out of some pharmaceutical company talking about a potential vaccine. It's any economic report, how the market responds to it. It's a very, very, very news driven market right now. And so with that said, with the uncertainty still there, it's very important to properly position size. And from a currency perspective, if you're position sizing over 1% of a portfolio in any currency trade, you're probably taking too much risk.
Yeah. By the way, New Zealand dollar, US dollar's got a nice little breakout. I don't know, Cody, if you were paying attention to that one. I was flashing through the currency report there, or the Forex report there over the weekend, and we did upgrade that New Zealand dollar. It looks like it is strengthening. But whenever the dollar weakens, Matt, obviously it's going to affect every other pair because it's the number one currency in the world. But that one did grab my attention. Quick peek at Bitcoin, if you can. Kind of a pullback here, Marquis. I know that GBTC has gone on your watch list, but this is not as deep of a pullback as you would like. I know you like things to crash down to the bottom before you buy.
Dude, I like good deals. I don't want to buy at retail. I want great deals. Give me a pullback to 6,000 so I can start a position.
Here's the problem, though. That's the difference between fundamental and technical trading, I guess, Matt, because if you pull back below this level, you're breaking the whole trend. The entire pattern is blown up and the chart is now going into a bearish position. A little double top there on Bitcoin. It did not break out of 10,000, which is why you got to get that confirmation. Matt, what's your read on that chart right there?
I mean, technically you're showing weakness here, double top, double bottom type scenarios between 8,600 and 10,000. A break of that 86 level, a break of that 200-day moving average, about 85.50, certainly could see prices come down. I'll be interested in Bitcoin after another 70% decline in price. Bitcoin has a history of doing that. So I'm not interested at the highs in Bitcoin right now, but a crash in prices, I could certainly be interested at that point. But again, I guess the question I have for Mark when it comes to the sectors here is, with the market starting to move into some of those distressed areas of the market, does that pique your interest a little bit from a bottom feeding type investor like you are?
Well, it does. The fact that I've seen the strong days be strong, like I sold a put on one of the distressed companies this morning at a lower level. I have more interest at some of those recent support levels. I have more interest in some at higher levels than I might have. I mean, the economy's reopening. And
it's not shutting down again. We all agree with that.
Well, boy, it'd have to get really. something of a
something nasty,
huge
right?
magnitude would have to happen.
Okay.
And the American consumer's appetite is ferocious, right?
It really is. The appetite is hungry.
And so, like on a Carnival or on a Planet Fitness or on, one of the airlines, I guess the best way to describe it is I'm still cheap, but I am selling naked puts at levels that I wouldn't before. I'm not going to chase price. If I miss price, I'll be happy making a little bit of money. Same principle that I've done for 8 weeks. Not knowing the future, not knowing the outcome. These companies still lost a lot of money, and I don't know if consumer behavior is going to return to what degree. 80%, that would be good. Carnival doesn't make as much money at 80%, but they start to make some, right? So I'm still going to be fundamentally driven. I'm still going to insist on a good deal, but I am raising the levels in which I would purchase. Like, for example, on Carnival, instead of freaking $5, maybe it's 10, right? Still way, 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 way down there, but still, raising those up, seeing opportunities where I can. Because I've seen now 2 days in the last 5 trading sessions where the distress industries have been up like 10% on some of these companies. How many, and we talked about this on the podcast 5 or 6 weeks ago, like where we said like vaccine and therapeutic treatment, and I gave it 100. We're going to have like dozens and dozens and dozens and dozens of vaccines days over the next year.
Mm-hmm.
The market is going to ferociously buy those up, and so I think there's some money to be made in those distressed industries if you're careful. And if they just take off and running, make a little bit of money, don't make a lot. I'm happy with that. I'm always happy making a little bit of money.
Well,
Yeah.
and I get that, but not everybody just sells deep out in the naked puts, and they're looking for investment thesis as well. When you're looking at this from a sector perspective, let's break down these sectors very quickly. First and foremost, we rank the sectors every single weekend in the Tackle newsletter, and as you can see, I mean, we upgraded almost everything across the board. The only two sectors that the only two sectors that did not get an upgrade was utilities, which we wanted to match in line with real estate, and basic materials, which we were seeing a little bit of consolidation in gold and whatnot. So those were really the only two sectors we did not upgrade. But when you're looking at these from a technical perspective, you know, basic materials breaking out of a consolidation pattern. Communications, one of the darlings of the market over the last 2 months, you know, gapping above the resistance level, showing a little bit of weakness from the cash open. Energy here pressing that 39.5 by $40 mark, up 3% on the day. A breakout of 40, I think is significant and absolutely could be tradable. Financial up big today on the housing data, up 5.5% today. Hasn't confirmed that reversal pattern, but you are starting to see it come back up into those resistance levels, and a break of those resistance levels, you would have to call for higher prices. Industrials here breaking out of a reversal pattern, double top, double bottom scenarios, breaking out currently of that 65.5 level. That was the old resistance. All moving averages now turning over, pointing to a positive. And from the cash open, and this is what I'm seeing in some of these distressed areas of the market today. Not only did they gap out on the futures running over the last 36 hours, but they also started running on top of the cash open as well. Technology, a darling of the market, the same way as communications, gaps out on that futures market running, and then immediately starts locking in profit, very similar to communication. Consumer staples still in that little bit of a flag pattern, a little bit of a neutrality, hasn't broken out yet. Real estate having a really good day today, up 3%, getting right back above those moving averages. Utilities, another strong day, breaking out of that consolidation as well, above its all of its moving averages. Healthcare, another darling of the market that has been really kind of, you know, driving price along with technology and communication. Gap out, lock in profit immediately. Consumer discretionary, same thing, gap out, lock in profit. So a lot of these sectors that have been the darlings of the market, they ran on the futures data the same way every sector is going to run on the futures data. The futures data simply tracks the S&P 500. So a lot of money comes into the futures market on the overnight action, but the cash open today was fairly significant to me when you start to see a lot of these areas of the market that have been the leaders of the market immediately start locking in a little bit of profit, whereas a lot of these sectors that have been distressed, they continue to run on the cash open.
Mhm. You know, and it is a very, very good point. The healthcare sector, by the way, I wonder why that one isn't running. We're getting all this positivity around the vaccine news. It's always popping the market, but it's now stuck in the mud here, guys. You know, that was one of the darlings there for a long time. But Matt, pivot. That's a consolidation up there for a
Same
month
thing
and a
with Merck.
half. Yeah.
It's weird to think about. You would think vaccines would help the healthcare and the pharmaceutical companies, and we've seen that in some of the micro pharmaceutical companies. We see that in momentum trading, but this is like the anti-momentum day. It's like any stock that's been running aggressively in the face of this is in the mood to take in a little bit of profit. And with the vaccine and the economy reopening up, the question is, does that help the banks? Does that help the industrials? Does that help the energy stocks as we start to get back to business as usual?
Mhm.
I think at this point it warrants a discussion on potential sector rotation happening before our eyes.
Yeah, but
Yeah.
how do you play it? I mean, that's the million question, because I buy all of your analysis, 100%. You know, I think that's strong on the opening. I thought your analysis was perfect. So how do you play it? Where do you wait? I mean, that's the million dollar question to me.
I don't know if you do wait on industrials. I don't know if you do. You certainly don't wait on industrials, not industrials, but you certainly don't wait on energy above $40. You buy that breakout. You buy the breakout of industrials if you believe in the sector rotation thesis. And again, one day does not make rotation. But you know, talking about Delta last week, gapping up on the news, it continued to run throughout the rest of the week and continued to gap coming out of the futures market earlier today. If the premise is the whole dogs of the Dow theory, right?
Mhm.
That the worst performing stocks in the Dow the year before is going to play a little bit of catch up the year after. Maybe you're seeing some of that happening right now, where traders and investors, maybe Wall Street, maybe institutions, maybe hedge funds. By the way, congratulations to the New York Stock Exchange for opening back up today. That was positive to see Governor Cuomo ring that bell earlier today. But I think you got to trust your eyes here. And if you do see those confirmation of those reversal patterns, I think you dip your toe in and you start taking a little bit of position size in those distressed areas of the market. Now, do you go full force and put some chips in? Of course not.
No.
Absolutely not. This is still an environment to be very cautious in, but we are starting to see that. When you look at the heat map here, you're starting to see that those areas of the market start to perform a little bit more. Looking at coming down here a little bit to real estate, utilities, basic materials, and look at the energy sector here today. Green, 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 green. Look at the industrial sector. Green, 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 green. Real estate, utilities. Green, green, green across the board. When you're looking at, financial outside of PayPal, and again, PayPal has been one of those darlings of the market, right? It's been a runner in the market, but yeah, it's one of the only stocks in this entire sector that is down. The banks up 8, 9, 10% across the board. Diversified banks up 7, 8, 9% across the board. Industrials up 5% across the board. So you're starting to see a little bit of rotation in that. And again, one day does not make for a sector rotation. But what do you see on the one-day relative performance? Financials, industrial, real estate, energy, utilities, consumer cyclical, consumer defensive, all these sectors that have been downplayed in the market during the market recovery. And what's underperforming? Technology, healthcare, communication services. Now they're all up on the day because this is, vaccine day. Everything goes up on the gap out. But the reality is you are starting to see money flow into those distressed areas of the market. Look at the 1 week relative performance, industrials, real estate, financial. You're still seeing three sectors that have been very, very beat up over the course of the last, 3 months and have not recovered to the same degree that the market has recovered. You're starting to see money coming into those. 1 month relative. This is where you see that leadership in communication services and technology really kind of driving the market. But then when you look at the 1 day and the 1 week, you're starting to see money come into those areas of the market that have been downtrodden, been distressed, have not participated in the V-shaped recovery that the stock market has. So whether it's 1 day, 1 week, we are seeing money start to rotate from those aggressive areas of the market that have been the market darlings over the course of the last couple months that have participated in massive growth across the market. And now you're starting to see money coming into those areas of the market that have not performed to the same degree. Does 1 day, does 1 week make sector rotation? No, it's damn near impossible to identify if you're truly having sector rotation. But couple the volume and the money coming into these distressed areas of the market, couple that with the technical analysis that we just broke down, with a lot of reversal patterns perhaps getting confirmed. I do believe you're seeing a little bit of that happening right now.
Yeah. And I don't think it means you have to wipe your old watch list out, Mark. You can still be interested in those Momo stocks when they come back, but you got to add to
Matt
it.
Totally
got to
convinced
develop
me
it.
to jack up my naked put levels even more. That's me getting frisky on a Tuesday morning. So
I don't like the word frisky, by the way.
Did I get a win there?
You must have. You must
it
have.
depends. Now, here's the rules, Matt, and I do this with any student that has a trade idea that I follow along with. It is always your fault if I lose money, but if I make money, you only get partial credit.
That is the rule.
There was one time I gave somebody I knew a tip. They asked me one tip, and I said, buy Tesla. And this was when Tesla was like $40 a share. Okay. They made so much money on the position that they literally took the money out of the market and bought a Tesla car with it. They didn't even give me a thank you. They didn't buy me a steak dinner. They didn't no thank you card, no nothing, no text message, no nothing. The next like 3-4 months later, they called me up and they asked me for another tip, and I gave them the worst tip in the history of mankind, and they ended up losing quite a bit of money on it. So if that's the rules of the game, you better be cautious about the analysis I give you.
Did they even give you a ride?
No, I didn't get a ride.
I could get $40 for a 40 strike price naked put on Tesla expiring in 2021. So I could buy Tesla at $40, Would it be a good
Yeah,
buy?
you're not buying just at $40. That'll just expire worthless.
No.
Nothing wrong with that, though. Yeah, you love those deep out of the money naked puts, Marky. And
Well,
if you're jacking up your levels,
I like to have fundamental conviction, right? I like to know that. See, this is one of the problems I think with like wannabe new investors is that they chase price, which is fine trading. When we trade, that's what we do. We trade patterns, we chase price, we do setups. Trading, that's the 100% proper mindset. But these quasi investor types are like, I'm buying this as an investment, chasing price. They don't have real fundamental conviction. So
No.
like when I buy something, and I'm not talking trading, when I say buy something, I want to believe that I'm getting a price level I feel comfortable at forever. That can be hard to do when the market is like catapulting upward to be like, oh yeah, I'm good here. This is the price I fundamentally have conviction. That's hard. And so oftentimes it's lower prices where you have more of that conviction at. That's just the difference.
Yeah, and I agree with that. You're not going to get a price that you want on a Momo stock. It's not going to happen, not from an investment perspective.
It's like, let me go buy 100 shares of NVIDIA because I know NVIDIA is going to be great for 10 years. I mean, I just don't have that.
And I like NVIDIA for.
And I like NVIDIA. Yeah, no, like, I mean, I like the company.
This is a really, really good company. But when it comes to getting a fair price, a lot of people look at 352 and they just say, is 352 a fair price? Well, whether 352 without some type of, comparison is just 352. It doesn't mean anything to the market. It's just the listed price. When Mark talks about getting a fair price, he's not talking about it from a technical perspective, which traders look at and don't care about fair price. He's talking about it from a value investing perspective. And that's when he wants to look at it, the comparison of price to earnings. And that's where it comes into PE ratios and PEG ratios and everything we look at. So if you're looking at 352 from an investment perspective and asking the ultimate question, is this a fair price to pay? Well, the PE ratio is 75, which means you're paying over market premium.
You really got to believe in the company. Like,
well, it's like not only do you got to believe in the company, Mark, you got to believe that the company is going to increase revenues over the course of the next 10 years, quite dramatically over the next 10 years. You take Zoom, for example, one of those, stocks that have just been one of the market darlings, right? I mean, everybody loves Zoom. But from an investment perspective, I love Zoom from a position perspective. I love Zoom from a trading perspective. But from an investing perspective, you do not make a successful long-term career by buying PE ratios that are over 2,000. That's absolutely just craziness to say, I'm going to take a position in Zoom over the course of the next 10 years and pay a price of 2,000. No, that's a Momo stock. You trade it from a momentum perspective and you wait for a better price, either through increasing earnings, through earnings reports, or decreasing price to make sure you get a better valuation. And that's what Buffett has been doing since 1952. Yes, he's missed out on some of the booms in the market. He missed out on the tech boom in the market. He missed out on the crypto craze in the market. He misses out on these high flyer momentum stocks, but I still think Warren Buffett does okay for himself.
Yeah, well, yeah, I mean, the company that comes to mind for me first and foremost in this discussion is Clorox. Is that I really think on some level there's a transformative shift towards more hygiene in our culture, right? To the product line that Clorox has. Clorox was a good, solid company before the pandemic. It just then comes down, and I think they have a sustainable uptick. Now, it might not be dramatic. People might revert to their old unhygienic, non-cleanly ways soon enough. But like long term, I think there's a slight uptick. So then, all right, so I'm totally on board with Clorox. That's the first part of the question. Then it becomes, well, at what price am I really comfortable with Clorox? And sometimes I think new investors and traders forget that second part. They get fixated with, this is a great company, or this is a great whatever, and then they lose focus on the price.
Well, isn't
aspect.
that where FOMO comes in? Is they look at the price of something going up historically, and they're like, I can't miss out on that next thing. I can't miss out on that next thing. And so they take a stab into any company, not Clorox, not Zoom. I mean, any company, and then it fades and like, oh, trading's gambling. No, there's more to the analysis than just I want to make money.
Mm-hmm. Markets are breaking out here today. We've got rotation into some sectors, at least some strength here off of distressed industries and some companies that are that were beaten down there for a long time. Let's transition into company news. We're now starting to talk about it quite a bit. A couple things. Number one, whenever we make this transition, I like to promote something. And Matt, here last night, you put the podcast up on the website. We cut that yesterday, and you got that out there. What an enjoyable podcast. We had Brandon Diaz on, and Brandon is just, if you've not listened to this episode yet, you got to go listen to it. And he is just a high energy, fun guy, engaging, interesting real estate investor. And we brought him on to have conversation about how he's dealing with the pandemic, the lockdown, and what's going on in real estate. Matt, explain that podcast a little bit. How do people find it?
We wanted to bring Brandon on. Brandon's a friend of the podcast. He's a real estate expert in many areas of the marketplace, but specifically from a short-term real estate perspective, wholesales, lease options, rehab projects. But he also has a substantial experience and knowledge in many aspects of the real estate market. And we want, even though we're a bunch of degenerate traders and so on and so forth, we know that a lot of people in our community, they are extremely interested in real estate, in the real estate market, both from a consumer perspective as well as from an investor perspective. So every now and then we like to bring Brandon on just to give his insight. And anybody that knows Brandon knows this. He's one of the most likable, high energy. Just his energy is intoxicating. It's impossible to be negative when you're around Brandon Diaz, because he just won't allow that. His story is absolutely amazing. And we didn't go through his story in this podcast. We really just stuck to the analysis in real estate. If you want to hear more about Brandon's story, he has been on the podcast before talking about, his upbringing, what made him an investor, what got him into real estate investing, and so on and so forth in 2010. Just an absolutely fascinating young man, fascinating individual, great real estate mind out there. And, we spent about 45 minutes. I had the pleasure of interviewing Brandon and spent about 45 minutes just going over the real estate market, what he's seeing in the data, what he's hopeful for, and what he's concerned about. And so I thoroughly enjoyed interviewing Brandon. And, it's just, when Brandon comes on, it's just two buddies talking about something. So I hope people get some insight out of it and enjoy it as well. And then we had Brandon do a stock picking contest.
What a perfect time for that, by the way. I mean, these are all companies that are up big here today.
Yeah. I mean, we did a bracketology contest where we basically ranked, or we basically, picked between 16 distressed areas of the market, i.e. stocks of the market. And, honestly, even though he's a real estate guy, I found his analysis pretty good. Now, he did agree with me on most things, so maybe that's also the case. But fascinating conversation. I hope you guys enjoyed the podcast.
I enjoyed it quite a bit. You can find it anywhere. You can find podcast on the website, and you can pop in and grab that content. Let's get back to stock analysis. Actually, let's start with VNO if we can here, Matt. Vornado, Realty Trust. Actually talking real estate, talking about Brandon. Actually, one of the perspectives he had was on commercial real estate. They came out with a report, actually, Matt, today. I thought it was really interesting. In New York City, where they have a lot of property, 80% of the tenants in commercial real estate did not make their rent payments in March or April, in April or May. Now in June, though, we're going to have some of these eviction bans start to get lifted. I know in Wisconsin, it's going to happen. I know in Texas, it's going to happen. Our landlord is going to start kicking people out if they don't pay the rent. And how is that going to impact commercial?
Completely different states, though, when you're talking the difference in New York and their residential and commercial property laws versus the state of Utah or the state of Texas. Mm-hmm. And so when you're talking about, consumer rights in New York, they simply have more than consumer rights in Texas and Utah do. Texas and Utah are business states. They're very conservative from that perspective. New York and California, they have tenant right laws. And so it's going to be interesting to see what happens in New York City given the fact that 80% of tenants are not paying their rent. Now, not residential, it's more commercial. But is New York going to do something about that? I don't see Cuomo saying, "Hey, listen, kick out all the companies if they can't pay the rent." I just don't see Cuomo doing that.
No, I don't see that in the short term, but it might just bring fundamental long-term problems. I mean, eventually those landlords are going to want those rent checks made
It
up.
leads to the same conclusion we've had for a very long time now. The concern in real estate for me, and it has been for a while now, is not residential property. It's commercial property. That's
Yep.
the biggest concern for me.
Yeah, I agree. SPCE, if you can, a couple of bits of space news here that I thought was really actually pretty interesting. Number one, Richard Branson and Space Virgin, I think Atlantic actually did dump some of the stock. We were having the debate a little while ago about, well, is Richard Branson going to unload some of his airline or this? He unloaded some of this, even more over the weekend. They had a failed mission, but obviously the company's finding some support. They were trying to launch a satellite into space, and it also brings up a conversation about SpaceX, Matt, where Elon Musk company is going to be launching some people to the International Space Station, I believe. Do you have any interest in the space sector?
No, I not as of right now. I mean, down the road maybe, but no, not as of right now. I do love it though. I love it. Elon and the private industry, taking over where NASA has kind of, taken a step back, where NASA really kind of focused on deep space now. They're really turning over to private companies to launch astronauts into space. And quite frankly, I mean, I watched Armageddon over the weekend, and I've watched Armageddon twice in the last week. And one of my favorite scenes in Armageddon is when the two shuttles take off, and they were real shuttles that took off. And I geek out on stuff like that. So
Wait. You went back you double dipped.
I went back for seconds. I went back for seconds.
Oh, dude. I mean, it's a good movie, but I don't know if I could double dip it.
Twice in the last week. I went back for seconds on Armageddon. But no, I just congratulations to Elon Musk and his SpaceX program. The Falcon rocket has taken 2 astronauts into the International Space Station, and you're going to see this with private companies taking over where the government and NASA has taken a step back, and I think that's a positive thing, actually.
Mark, the inner nerd in you has to love space stories, doesn't it?
Of course.
Yeah.
Battlestar Galactica. I grew up on Star Wars. Of course, I'm a huge freaking nerd.
Are you interested in this sector at all? This was a high Momo stock there for a long time.
Dude, I'm looking at naked put levels right now, So
Maybe space is going to be added to Mark's watch list. I'm sure you could get crazy premium deep out of the money. That's got high volatility.
what is the volatility on June?
123%.
Yeah. I mean, listen, it's hard not to find good deals when you have 120% volatility on option chains.
Sure.
So,
sure.
Yeah, sure. Why not?
Next,
what's the most I can.
I do agree with Hero though. Space, i.e., Virgin Galactic, doesn't have the resources to compete against Tesla and Elon Musk and SpaceX. SpaceX is the leader in the horse race for that.
Do they have plans to go public at some point? SpaceX itself?
They had their solar city company. They had that public, and then Elon decided to shift checking to savings. So I think as of right now, he's just doing everything under SpaceX separately than Tesla.
Yeah, and the Boring Company. A lot of his other spinoffs, I don't think any of them are public. I think he stays with Tesla. But yeah, interesting. Next story that grabbed my attention: AT&T. I think you're going to see a lot of this just in the regular old media and social media and whatnot. Tomorrow, Matt, they are launching their HBO Max, which I had to look up. By the way, we were on the phone. We were talking about it. I had to look up what this was in terms of difference between HBO Go and the regular HBO. Basically think of it like this. They're trying to compete with Netflix. They bought the rights to Friends. They're going to stream it there. They've got thousands of hours of content. They're expanding. And quite frankly, I think they've got a better chance. I mean, you think about HBO's catalog and you think about everything HBO has, they probably have a better chance to compete with Netflix than even a Disney Plus, in my personal opinion. Any interested in AT&T here, Matt, who owns all of HBO's content?
I mean, it's the same type of analysis we had earlier today when we were talking about bottom feeding. I mean, is AT&T a potential buying opportunity as these moving averages start to cross over from the short-term moving averages to the longer-term moving averages? I don't think so. I think for me, it starts at 3150, a close above 3150. You could certainly map out a proper return versus risk versus probability analysis coming back into 34, perhaps even that 200-day moving average. So as of right now, the gap up is certainly positive, up 3.88% on the day so far. And not only that, but when you're looking at that cash open, we saw this earlier today in a lot of these distressed areas of the market, the gap up on the futures market on the overnight action, and then it continues to run in the face of that gap up. So that's obviously positive here as well. But when you have that overhead resistance right there at 3150 and the current price tag is right there at 31, it's probably prudent to wait to see that confirmation of the breakout and perhaps even a retest of that breakout channel at 31.5 as well. The one question I just speak about this as a consumer more than an analysis, but HBO, I mean, how many different versions of HBO do we now have?
You got the HBO Go, you got the HBO Black, I think.
There's 3 or 4 of them right now, the different variations of how you can get HBO. Netflix, there is one version. When companies make it complicated, that's not a good thing for consumers. Consumers either, i.e., want to be told what to do, or consumers want that choice being very, very, very easy for them, right? And when you're looking at HBO Max versus HBO Go versus HBO Black versus HBO this and that and this, it's like, well, what version of HBO am I looking to get here? I do think that's a little concerning from a marketing perspective. Disney, say what you will about the launch of Disney Plus, and it has not been celebrated post-launch the same way it was pre-launch, and the content is a little concerning out there as well. I mean, at least they have Disney Plus, right? That's what they have. That's their offering. Netflix, this is our offering. Hulu, this is our offering. Amazon Prime, this is our offering. When you're creating a product for a consumer-driven society that lacks critical thinking skill set, you got to make the choice very simple for those consumers.
Yeah, no, I agree. It is confusing. What you and I were talking about, what is this? What is that? What do you get? And I do understand there's a concern there, but once you look at the content, I actually think they're going to be quite competitive. I think it's got a good lineup, Matt. They've got good stuff. I mean, they own like Big Bang Theory and I believe Friends and all kinds of different things. So it's going to be interesting.
So much content.
Yeah.
So much content.
Yeah. Warner Media. Let's move on. Hertz. Here's another fallout from the whole lockdown situation and a company that had to file bankruptcy. Chapter 11 here today. There was also an airline that filed bankruptcy. I expect we're going to see more stories like this as they try to restructure and come out of the whole situation here, Matt. Obviously not good news. The airline LTM as well. I mean, that's one of the first. I don't know how many airlines have filed bankruptcy. But Mark, there will be some of these losers in this whole situation that have to come out and, find a new business model or whatnot and move forward.
I think you will see a record number of small business bankruptcies over the next 2 years.
Yeah, I agree with that.
And that does not mean the economy goes down, and that doesn't mean the stock market tanks. I'm talking small businesses.
Crocs next, if we can, Matt.
Crocs got fascinating data today. Fascinating. Bo Moody has to be just happy as a pig and you know what right now. I mean, Crocs, Tim, the news out of Crocs today, somebody help me make sense of this. There was a report today, and it was out of the Wall Street Journal, that tracks 30 different shoe apparel brands. And the only one that saw an increase in sales last month was Crocs. No other. Adidas, Nike, Reebok, and no other saw an increase in sales. But the plastic shoemaking company Crocs saw an increase in sales.
Dude, you're hanging out. You want to be comfy. You don't need to look good.
They're comfortable. They're comfortable shoes.
I mean, who cares? You don't need the dress shoes, right? Hanging around
it's in the eye of the beholder there, brother.
You slip them on, like they're comfortable. You take them right off. Yeah. I think it's a COVID play.
I think I told this story on the podcast once. I actually met the inventor of the Crocs shoe on an airplane once.
I remember that.
Yeah, he's a very interesting guy. We talked for a long time. He actually was just
Colorado.
One of these beautiful stories, Matt. He actually made it in his little shop in the backyard where he used to just do all kinds of experiments and stuff. He used to love to create things. And Kind of a cool, story coming from nothing into a huge company. I don't own any Crocs shoes, but obviously sales are up and it is popular amongst people who do have them. And I
I
know
agree with no. Don't confuse comfort for convenience. There is a difference in those two.
I think they're both
I'm
comfortable and
anti-Croc.
convenient. They're ugly,
I-
but they're both comfortable and convenient.
I'm taking a risk here with our community, but I'm anti-Crocs. Like I'm out on Crocs.
dude, I'm getting me a pair. I'm on the shopping right now on Google.
Listen, when you see me in sweats, a hoodie, a hat, and a pair of Crocs at Walmart, you know I've given up.
Oh, that's funny. Now I got to recreate that. We got to see that now, man. Disney, if we can, we talked a little bit about Disney. One of the interesting things about Disney, obviously, they are partnering with, the NBA here. It seems like, Matt, this is pretty much a done deal. They're going to start playing games at some point this summer. I read July, I believe, in sports. In fact, the whole call for sports to come back has been strong and across the board. And as economies reopen and restrictions start falling away, we are going to see this. Do you think we're going to actually see the NBA by July, Matt?
I don't know. I'm still on Crocs. Yes, I do think you're going to see the NBA by mid-July. The reports right now is the NBA is looking to open up training camps in mid-June. They're looking to have a 3-week training camp. And then there's multiple proposals about how the NBA is going to come back. Are they just going to have Are they going to have some playing games for a tournament? Are they going to just have the 16 teams that are already in the playoffs? And they're all going to play in a nice little bubble there in Disney World in Orlando, Florida. And I for one, just look at the audience that was there for the Tiger Woods, Phil Mickelson, Peyton Manning, and Tom Brady match. It set a record for live golf viewership. When you saw NASCAR come back a couple of weeks ago, record number for viewership. Consumers that have been locked down forever, we are thirsting for live sports, something to take our mind off anything. And so I think the NBA is absolutely coming back. A deal is almost struck there. It's most likely going to be played in Orlando. And I, for one, cannot wait for that. Cannot wait. Now, I'm a little down because, Bojan got injured. He's not going to be in the playoffs for the Jazz. But outside of that, I'm very interested in the NBA coming back, no doubt.
So do they have regular season games they got to finish, obviously, right? So are they going to do that? Or are they going to just seed the playoffs?
Well, we don't know yet. But the teams that are out of the playoffs, like the Knicks, like the Golden State Warriors, like the Phoenix Suns, they're all like, why are we going to Orlando? No, I don't want to go to Orlando. I'm not going to play Steph Curry in Orlando. I'm not going to, it's so the movement is really looking at this point to be the playoff teams that were the playoff teams pre-pandemic coming in and playing a full slate of games. So 7-game series across the board. I can't wait. And no, there's going to be no asterisk next to the NBA champ this year. No asterisk. If you win it, you deserve it.
Dude, it reminds me of an old school, just tournament that you have in some gym somewhere nobody shows up to, and you just play it old school style. It's going to be a lot of fun. I will.
Commentators are going to be important.
Doubt.
Commentators are going to be very important in that because you saw this out of the golf with Tiger Woods and Phil Mickelson. Outside of the live viewership, which brings a lot of energy to the arena, a lot of energy to the course and all that, commentators like Charles Barkley and Justin Thomas were absolutely gems during that live without the live audience. So I do think it's going to be fascinating theater, just absolutely fascinating. I can't wait.
Please do not pump music into these stadiums. I don't need fake sounds and all kinds of stuff like there is a crowd there. I want to hear the shoes squeak on the floor, Matt. I want it just like old school style, just in the gym. That's me personally. I don't know what they're going to do with that.
You're hoping for 1978's NBA playoffs.
That's right. I want to hear that, the squeak and all that kind of stuff. Let's keep moving through the markets here. There's, not that much more actually that in terms of news that I want to break down here, Matt. You had some stuff on, I believe we talked about sectors. We talked about Novartis and how this whole rotation has been happening. There was some interesting stuff from, some of the setups from over the weekend that I found kind of compelling. And I did want to talk about that for just a minute. Marky as well. You also, you wanted to talk about IPOs. Matt, who's IPOing this week? You had a few on your list, I believe.
There's a couple IPOs that have my interest peaked here. One is Albertsons. A just giant food chain is Albertsons, and they used to be extremely popular in Utah. They are not nearly as popular in Utah any longer. But Albertsons is filing IPO this week, and then online car seller Vroom. I don't know much about them, but I am interested in any company by the name of Vroom. VRM is going to be their symbol. So those are the two IPOs I'm interested in this week. Now I'm not going to buy them because I don't buy any IPOs, but those are two I'm going to start tracking.
Mm-hmm. That is stocks in the news and our stock talk section that we go through each and every day. Let's now transition to the end of our show, and also the last little segment. We go through the coach's corner, where we talk a little bit about, things that are on our mind, companies that are grabbing our attention, so on and so forth. A couple things to promote. Number one, tonight we do have our coaches show for our pro members. Come and join it. believe Coach Tyler is going to be hosting that. I don't know who the co-host is. I think there was rumors of Coach Emily, but I will confirm that a little bit later. Marky, obviously Tyler's just a great teacher. There's no question about it. Pro members love whenever he comes in and does those nightly webinars. If people are not a pro member yet, they can grab a link in the comments below and also in the description for this. And, Matt, the other thing is, if you aren't a pro member and you're looking for something free, that seven-step guide course is something that I love people to start with. And if you're out there and tackle trading is new for you and you've not been with us for a long time, there is a free course on the website, the 7-Step Guide to Trading, that Matt, we put out there a little while ago. I think it's been about a year and a half now, and just fantastic course. Explain that one if you could.
Yeah, if you go to the store tab here, you can see kind of what you can get to Tackle 25 and all that, but 7-Step Guide is right underneath that. It's a free 2-hour course teaching people how to navigate the market on a daily basis, both from a daily routine as well as finding trades, prepping trades, placing trades, journaling trades, and managing trades as well. So there's that 7-step process that we go through from start to finish in terms of routine to finding to placing to managing to tracking. And so that 7-step guide is a very, very good course for new traders to start on, just kind of learning the process in going about the routines to placing trades. So it's definitely a great place to start. We originally did the first 7-step about 4 years ago. We revamped it, redid it, repolished it about a year ago. Something we're extremely proud of is the 7-step guide.
Okay. Coach's Corner time. Let's start with me. Actually, a couple things I'm interested in paying attention to. Give me QSR if you can here, Matt. This was the stock report candidate from over the weekend, and we were looking at reversal characteristics. Now, here's the thing that happens sometimes. I miss the gap out, and I think a lot of traders would miss something like that in a day like this 3-day weekend where everything gaps up and comes back. So now you kind of have to update your plan. I'm watching for this to pull back intraday here, Matt. Talk a little bit about that if you can, because this is very common. It doesn't happen every time, but you will have situations where you miss your entry point, right? On something that you were interested in, then you have to start breaking it down again and reanalyzing it. How do you approach that, Matt?
Quite frankly, it was very common on a lot of those momentum plays that we saw in the market over the course of the last 2 months. They all gapped out today and came right back down, and it's hard to predict when those things are going to happen. But when you have a 3-day weekend and you have a lot of bullish momentum coming into the futures market over the last day and a half, you're going to see a little bit of gap out. And then with the momentum stocks, a lot of traders just decided to take the gift of the trading gods and lock in profit. And that kind of leads to that, the discussion we had earlier today on if we're seeing a little bit of bottom feeding happening here. When you miss the trigger, you can't chase. You got to reestablish the plan. And so when you're looking at QSR, you're saying, okay, I like that gap out here. I like it going up above that resistance channel. It's kind of holding the intraday here. At that point, you got to break this down from an intraday perspective and remap out the trade. So if you missed out on your confirmation or on the aggressive trade, and a lot of traders do like to wait for confirmation, you reestablish the trade. And so if your original trigger was right here above the breakout channel at say 53.75, and it broke out above that level at 55.20, it most likely gapped out above your trigger. And so you got to reestablish that. And so whether you say, okay, let me play it off that intraday pullback retesting, that is certainly one thing you absolutely can do, focusing on, bullish retracements from an intraday perspective, or you wait for it to break out of the high again and re-trigger above the high.
hmm Another one, same thing on Google on the options report. This is one that I've been watching for a long time. I do love communication sector, but you were talking about this on the rotation earlier, how communications and tech didn't really participate as much. And now you got this little doji on the gap out, and it's like, okay, is this confirmation or do we see something different when the market conditions are putting me into a red flag here, Matt? I'm going to be watching this one. I do like the breakout, but I'm still waiting. I need it to cook now a little bit.
Well, and yeah, but a close above that 1420 level, you got to call that confirmation. And whether you're, trading a bull call spread, I mean, if you're calling this confirmation, I mean, you can certainly still make that trade.
Yeah, those are a couple I'm watching. Also, Target. I like the pullback continuing to develop in Target. Their sales numbers, their earnings report from last time. We talked about it on the halftime show when it was happening. And red candle here today as this kind of rotation is happening. It's got to slow down.
Needs to slow down. So yeah, you need a doji, you need an upward movement in price. I think this is a pretty easy trade. If you get a doji, you get a little bit of slowing momentum, support levels do hold, and then you reclaim that 120 level. So whether it doji's here at 117 or 116 or 118 does not matter to me. When you're looking at this from an intraday perspective, I do believe that 120 breakout is where you're looking at confirmation.
Mark, you next. What's on your mind here? What are you going to be paying attention to today?
Like on a day like today, where you have so many gap outs, I remind myself of what I like to do because, at the end of the day, that's all that matters, what I'm comfortable with. And if I don't get a smooth opening to my trade, I usually wait for the next setup to occur. Like I hate gaps. I hate gaps. I hate gaps. I hate them. I hate them. I hate them. I like that smooth continuity to a trade. And so I'm willing to be patient on a gap. Maybe it comes back and refills, right? Maybe it doesn't. But that's what I'm going to insist upon on my trades, to get some kind of smooth technical pattern. Because gaps, boy, I mean, they just mess up a lot of setups. So, and at the end of the day, you have to ask yourself as a trader, does it bother you? Some individuals, it won't. Some individuals are fine. Breakout's a breakout. That's all they care about. I like that continuity of a trade. I like those smooth breaks. Now, we get fewer of them than ever before in this market. It seems like, especially on Mondays, right? Mondays, what is it? 7 of the last 9 weeks, we've had up days, some of them gappy in nature on Mondays. That's a trend maybe I'll think about betting, right? We always say, like, be a little cautious on Friday. Freak. The weekend, those overnight action, they've ramped that up 7 of the last 9 weeks. So, but another pattern will develop. I'm looking at PayPal. I'm looking at NVIDIA. I'm looking at Etsy, things that immediate sell-off as soon as the action. Another pattern will develop. I don't have to chase a pattern, or I don't have to chase a setup that I don't like. Because at the end of the day, we got 250 plus trading days a year to trade. We got thousands of companies. It's okay if you miss one, if you don't get exactly what you want.
Maddie, what about you? Final thoughts there, young man?
A couple stocks I'm looking at. We talked about Clorox earlier today. It has a little bit of a deep pullback here. You are starting to see a little bit of slowing momentum as you come into these old support levels right there at about 197 by 200. You're seeing that slowing momentum. Obviously, you would need to reclaim that $200 level, in my opinion. But a close above $200 would be confirmation on some type of bullish trade above that 200 with a stop loss underneath 200. Also, Wayfair on the report here this week, still kind of holding its consolidation pattern. Look for Wayfair above 170, maybe even aggressively above 169. When you look at this as an aggressive type setup, you see this retracement start to happen, and you see a very consistent trend from an intraday perspective coming down, 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 down. Then you see an increase in support levels, and you start to see those support levels hold right there at about 156. So a trigger above that level, and you see that intraday old support right here, new resistance right there at about 169 by 170. So something above those levels might be, it would be aggressive. It's Wayfair. It's one of those high flyers that can absolutely move up and down, but that could be something from a return versus risk ratio that might be enticing. I'm still looking at that energy sector as a whole. You're currently sitting at 39.66. I love the consolidation over the last 3 weeks. A close above 40 to me would be significant for this sector, especially if we are going to see a continuation of that bottom feeding mentality that we've seen certainly today, but really over the course of the last week as well.
And in energy, we talked about it last week. You're seeing relative strength again in the refiners. Like the
and that's where I'm looking to play it. The Phillips 66,
Valero, Phillips 66,
Valeros,
Marathon
yes,
Petroleum.
absolutely.
Again,
I'm concerned about the drillers the same way you are, Mark. Obviously, when everything kind of goes up, they all kind of trade in line with one another, but then they start to separate themselves. If there's a concern with the massive rise in oil over the last month and a half, I mean, we are having a record percentage increase in oil this month. If there's a concern that that's a little overstretched and we might see some consolidation there, the refineries are certainly the play here because they're not as tied to the oil market as, say, the drillers are. So with energy above $40, I think keep an eye on those refinery companies like Valero, like Phillips 66 as well. And then one that's setting up, in my opinion, and probably the confirmation from a bullish retracement perspective is BGS, B&G Food Group here. Upward movement in price, confirmation, reclaim that 9 EMA. That's a nice little confirmation on a bullish reversal for a stock candidate.
Yep. Last one, actually, just I found this interesting as I was scanning the news as we wrap it up here. JP Morgan, if you can hear, Matt. Jamie Dimon, in a questionnaire, he said that his stock company is very valuable. Somebody asked him about the valuation right now. He says, I'm not going to try to pick the bottom. You can't be a bank and be immune to what goes on out there in the world. But our company's value is very valuable right now. Coming out reiterating, stock is up 8%. That might be some of the move into finance here, guys, a little bit. Obviously, the rotation's been all day.
Yeah, that's par for the course with the financial industry today. JP Morgan's no different than Bank of America or Wells Fargo today.
Yep. All right, guys. Great show here today. Go ahead, Mark.
Kudlow is promoting a back to work bonus. You know, Republicans are dead set against the extra $600, but they're trying to find ways, but that's, hey, listen, you're giving out free money in an election year. It's not usually a political thing to pull that back, but they're really, really against it, right? So they're now talking about this back to work bonus that if you actually do take a job, so many people are getting paid more money to sit at home than they were previously making. They're talking about some kind of back to work bonus.
Interesting. How much?
I don't know.
$600. I mean,
they're trying to figure something out.
Do you get the offset of that money just if you do go back to work? I get it. They're probably trying to problem solve. They do hate that though. Fiscal stimulus. So is there any more chatter on that front, Mark? They talking this week.
It's just a real hard because like the market needs more money, right? Powell even said you guys need to spend a lot more money. Mm-hmm. But the Republicans, are getting a little bit back to the roots and saying, hey, we're only willing to spend trillions, not tens of trillions. So they're trying to be creative to get people back to work. That's the thing, right? You have a lot of people that don't want to go back to work because they're making more money on unemployment.
Your capitalist economic heart is probably bleeding right now. You don't like this at all, I'm sure.
No, and I don't like. At some point, you've got to pull those benefits of unemployment to incentivize workers to go back to work.
Yeah,
I'm a fiscal hawk. I'm a monetary hawk. I'm a debt hawk. And so I certainly understand the measures that we took were needed at the time. But as the economy reopens up and people get back to business and, home prices are where they are and the stock market valuation is doing what it is, at some point you got to say, we got to incentivize workers to go work and go produce goods. So, I go back and forth a little bit on it because I understand the need for fiscal stimulus during, economic situations that demand it. But at some point, you have to have the difficult conversation of at what point's enough, right? Mm-hmm. And if the economy is going to reopen up, and we're going to start developing, vaccines and herd immunity and so on and so forth, you got to send people back to work.
Got to go back to work. And that's our show
People
here.
cannot make more money on unemployment benefits than they do in the labor market.
It's
That
not a
is
good
not
equation.
how you build an economic system.
No, obviously not. And those things do end in July, obviously. I mean, that extra $600, and they're not going to re-up that. So back to work bonus probably would just be in the short term here, Mark, June and July to get through that period, I'm guessing. Matt, explain our pro membership. I just dropped the link in the chat. 15-day trial is always what our offer is. Explain what that is if you can.
Hold on, I'm responding to this dumb comment thing.
Isn't everyone playing the stock market a capitalist?
No,
Not
no,
necessarily.
the stock market is not the economy, and it's not an economic philosophy, not in any capacity. The stock market is a Fed-driven monetary and fiscal tool. So no,
Yeah,
I completely disagree with that comment. Completely. So every millennial that has opened up a Robinhood account is now a capitalist.
Well, even
We've
just
seen Robinhood account opens up in the last 3 months from 4 million open accounts to 12 million open accounts. So does that mean every millennial that is chasing the dreams of gains in momentum stocks is a cold-hearted capitalist that understands Adam Smith capitalistic principles and economic theory? Come on, get out of here with that.
There's stock markets in every country in the world, and they're not all capitalists. So that includes China.
Stock market's a game, and games are awesome. Like it's learn to play the game, learn to make
I don't
money.
even understand this comment. So stock market is nonprofit. I don't even understand that comment. It makes no sense.
Well, let's not go off on that. I don't understand it either. So let's pitch our 15-day trial if we can. Well, let me think about this capitalism thing. Trade is capitalism. Clarify there, three trees.
Trade is trade. Trade is trade. Trade has been going on before capitalism, economic philosophy even existed. So no, move on. I'm done with it.
Yep. All right, guys, that's our show here. Matt, take us out, explain that trial. We actually have had quite a few people actually join our community recently. If you're new to our pro community, welcome as always. If there's ever anything you need, you let us know. team@tackletrading.com. We've got reports, we've got shows, and we give people a chance to try it out for free. Matt, anything to add to that?
No, I'm still hot on the.
I know you are. I'm trying to distract you and get you to move on. It's not worth it.
It
is not.
makes no sense in any capacity.
The written word doesn't always have context.
I get that. Believe me, my emails are proof of that.
You of anybody, right?
I believe me. I understand the written word can be taken out of context, but I'm trying to understand I need some seconds to think about that one. Wow.
Yeah. Guys, that's it. Obviously markets, give me a last peek at the market if you can here, Matt. S&P 500 and just on a 5-minute chart. For me personally, the close has to stay above 3,000 or else you're going to have the headlines that it couldn't hold it, the 200 period moving average, things like that. The breakout, you've got aggressive confirmation here in the morning after the 3-day weekend. Can we get the conservative confirmation and the close of the market? We got a couple hours until it does it. So we will wait and see. As always, guys, if you're out there watching the show, thank you for being here. If you've not yet done it, subscribe, click the bell, come back and join us each and every day. We go live whenever the markets are live. And again, there's a 15-day trial in the comments below. Come join our pro community and see what we do over there on that side of it. It's holding it, guys. It is holding it for now. We'll see you tomorrow. Everybody, we're out.